Well, Singapore's manufacturing sector continued its growth in March, but at a slower pace than the previous month. New orders and factory output saw a slower expansion, while inventory contracted at a faster pace. New exports and employment, however, recorded faster expansion rates. The Purchasing Managers' Index for March dipped by 0.1 point to 50.1. Now, PMI reading above 50 indicates that the manufacturing economy is generally expanding. This is the 21st month of consecutive expansion for the manufacturing sector. And the PMI for the electronics sector also saw a slower rate of growth, dipping 0.1 to 50.4. Still, it's the 20th month of continuous expansion. The Singapore Institute of Purchasing and Materials Management says the Russia-Ukraine conflict has clouded the outlook of the manufacturing sector and increased inflationary pressures. One economist says there are signs of supply disruptions and the risk of higher prices for goods and food from higher energy prices. But now is not yet the time to worry, as the manufacturing sector remains a key pillar of growth.
I think there is some initial signs of supply chain disruption that could be on the cards. If we recall this exact same index, a supply deliveries index back in 2020, this index has actually fallen below 50, and that actually signifies or symbolizes a supply chain disruption environment back then. And currently, in March, the supply deliveries index has fallen, but not into contraction territories, and that basically means that we are not seeing a supply chain disruption at this point, but the risk is there.